Hello, this is Richard Kosoff with Guaranteed Rate. Last week we talked about FHA mortgages. This week, and in honor of Veterans Day, I thought we'd talk about VA loans. So, who qualifies for a VA loan? Well, Army, Navy, Marines, Air Force, Coast Guard, and reservists. Each group requires that they be a member of these organizations for a certain period of time. For reservists and National Guard, that's the longest. You had to be a member or serving for 6 years. For the other groups, it's 91 days during an active conflict or 181 days during peacetime. But you can become, or you're eligible for a VA loan, and let's talk about those benefits. To begin, VA requires 0% down. How great is that? You're making your apartment payments. You're paying $2,300, $2,500, $3,000 a month. You don't have the ability right now to save money for a down payment, the 3, 5, 10% that's required by Fannie Mae, Freddie Mac, or FHA for that matter. But with VA, they require 0 down, so that's a big deal. And the rate for VA is far superior to Fannie Freddie conventional 30-year fixed today. A VA 30-year fixed is at 6.2% today. Obviously, it can change daily, but I wanted to be able to show you a comparison. 6.2 versus Fannie and Freddie, which is 7% and 0 points. 0.8 difference is huge. 0.8 times 400,000, for example, if you were to buy something for 400,000, is 4/8 or 3,200. So you would save $3,200 in interest per year by having a VA loan. Now, VA, I should tell you, like FHA, has an upfront funding fee. Or for FHA, they call it an upfront mortgage insurance premium. For VA, they call it a VA funding fee. And for VA, that dollar amount is 2.3% when you do 0 down. I should tell you that if you do put 5% down, that funding fee goes down a little. It goes to 1.65, and with 10% down, it goes down to 1.4%. So what is the funding fee? So like FHA, if you were to finance a $400,000 loan with 0 down, you would take $400,000 times 2.3%. That comes out to $9,200. So you're buying for $400,000, but you're actually financing $409,200. Okay? For FHA, for Fannie and Freddie, you also have a monthly mortgage insurance premium. Not with VA. That is a big deal. With FHA, they charge you another 0.8% of the loan amount, which gets rolled into the loan on every monthly basis. And for Fannie and Freddie, it typically varies between 0.625 and about 0.9% for a monthly mortgage insurance premium. Again, VA, no monthly premium. So, for conversation's sake, let's do a quick example. $400,000 at 7%, that payment comes out to $2,661 a month, plus the monthly mortgage insurance of $266 a month. So the Fannie Freddie 30-year fixed has a payment of $2,927 a month. It's huge. Look at VA. VA at $400,000 plus the 2.3% upfront funding fee. That actually comes out to finance, when you finance $409,200 at 6.2%, comes out to $2,506 a month. $2,506 versus $2,900. You actually end up saving over $400 a month by having a VA loan. How great is that? Let's talk about condos. That's the next big issue. So if you're buying a single family home, there's no problem. You can, if you served in the armed forces, you deserve a benefit, and VA is allowing you to do 0% down, no questions asked. But on a condo, it's a little trickier. The condo complex, like FHA, the condo complex has to be VA approved. So on a bright note, many condominiums are already VA approved. And if you go to Google and look up VA condo lookup tool, you can look for all the condo complexes in your area that are already VA approved. And that makes it a lot easier. especially when you make an offer on a place that's already VA approved, there's no questions. It's done. Nice thing about VA is once it's approved in the past, it's approved in the future. If the building is not approved, that's where it gets a little tricky. First of all, VA wants $895 to process an approval. You got to get the CCNRs, the budget, the bylaws, just like FHA, the financials, the minutes from the last meetings held by the Homeowners Association. All of that has to get submitted to VA. They have to look at it. They have to approve the building. So it can be a challenge. Also, per the VA, it can take up to about 30 days. So if you did want to make an offer, a seller has to agree to wait that period of time to see if their building can be VA approved. And very often they will be if they're in good condition. But again, it can be a challenge. Okay, that's it for me. The benefits of VA, of course, 0 down, no monthly mortgage insurance, and a superior rate to Fannie Mae and Freddie Mac. If you served, it's a terrific benefit. Take advantage of it. Thank you very much. This is Richard with Guaranteed Rate. Do me a favor, click the subscribe button below. I think next week we'll talk about the advantages of owning versus renting. I think that should be a good conversation. Come and find me at richard.kosoff@rate.com. I hope we work together in the future. Thank you, and we'll do it again soon.